On Business Incorporated, Africa's free trade area to get $7 billion in support from AfDB. South Sudan and Kenya sign border cooperation deal. Kenya's capital, Nairobi, ranks among top 100 global financial hubs. Hello and welcome to the program. I'm Chimeze Obi Iwagu. Let's kick off this last edition for the week by checking in on numbers from major equity markets in Africa. And intraday, the JSE index in South Africa and the Nigerian market went sideways. South Africa's JSE index edged up 0.15%, while Nigeria's main index was marginally down 0.01% at intraday. Egypt's EGX 30 is closed but traded in positive territory on Thursday. Meanwhile, Nairobi Stock Exchange closed Thursday's session negative, down by 1%. Crossing over to the Middle East, the markets are closed this Friday, but on Thursday they ended trading mostly positive. The Abu Dhabi index was significantly up by 0.71%, while Dubai's main index was up just by a wider margin, 0.76%. Elsewhere in the region, Saudi Arabia's primary gauge inched up by 0.17%, but on the flip side, the Qatari index fell sharply by 0.62%. In Europe, markets pulled back slightly on Friday morning after a roller coaster week for global stocks, with investor focus now turning to a key U.S. jobs report. For more, here is Chelsea. Hello, Chelsea. Good afternoon. Well, German exports fell in August for the first time since April 2020. That's according to a new data this morning. This must be a worrying sign for export-dependent Germany.
Yeah, it definitely is. The German economy is extremely dependent on exports, and about 1 in 4 jobs here rely on exports to the rest of the world. So the fact that it is starting to go down is majorly worrying for the broader economy. And we also haven't seen that throughout most of the pandemic. We did see some declines at the very early stages whenever things were literally closed around the world, but since supply chains have reopened, since factories have reopened, the export sector here in Germany has been extremely resilient. But what this shows is how the supply chain issues are really starting to eat into the German manufacturing sector. We're seeing now not just semiconductor shortages that have been hitting the auto sector for quite a while. We're also seeing shortages of energy sources, of wheat, of aluminum and steel. All of this is making it very difficult for companies to keep producing at the same level as they have in the past, and some are trying to find different sources of products. They're trying to find different supply routes, but those are really long-term and very difficult changes to make at this point. So most industries are preparing for these supply chain issues to last for the rest of the year.
And cooler weather is heading on its way to Europe, adding concerns about gas shortages for heating. Tell us more.
Well, it's quite unusual for weather forecasts to be so carefully watched by investors and traders and economists, but given the natural gas energy shortage that we're seeing here, it's very critical at this point, and everyone is watching to see how the weather unfolds as we head into the winter. What these latest forecasts show is that we are expected to get hit with a cold front over the next 2 weeks here in Europe. That means that businesses and households are going to be turning on their heaters for the first time, and those natural gas stockpiles, which are already at the lowest level in a decade, are going to start to get used up. As well, it means that our wind turbines are going to not be producing as much power, so that's also going to add to the energy shortage that we're seeing here. It is a little bit too early to say how this is going to play out in the long term, but of course with natural gas supplies so low, the fact that we are starting to get the winter heating season started quite early on is definitely going to raise concerns about whether Europe has enough natural gas to make it through the winter.
And a global minimum tax rate is becoming more and more likely after Ireland dropped its opposition to the idea. Is this a done deal, or are there still hurdles remaining?
It does look like this might actually happen. The OECD is expected to announce the deal later today, and it's just worth noting how unlikely a global tax deal seemed at certain points over the past several months. It was an enormous undertaking that required more than 100 countries to agree to this, and there were a lot of people, a lot of countries that didn't want to change their tax codes, particularly here in Europe. We saw Ireland put up a major fight against this proposal for a minimum tax rate for companies around the world. Ireland is a big source of these tax-related issues because they have a very low tax rate that a lot of companies have exploited to keep their tax bases low, especially some of the big tech companies like Facebook and Amazon have made Ireland their headquarters because they've been able to basically avoid other European taxes. So Ireland did finally drop their opposition last night. They have decided to get on board, and that basically clears the way for this deal to start making progress. There are still some questions overhanging the deal. The biggest is whether the U.S. Congress will be able to pass this. The U.S. Got on board with this proposal once Joe Biden came into office, but it has to be passed by U.S. Congress, and as we have seen with other issues like the debt ceiling, it's pretty difficult to get anything through Congress right now. So that's really the big question overhanging this, is if the U.S. will actually be able to take part in this idea.
Okay then, Chelsea, I think it's time to say thank God it's Friday. Enjoy the rest of the weekend. And in Asia, Chinese stocks rose on the first day of trading after a week-long holiday, tracking other stock markets across Asia Pacific as markets on Wall Street rallied. Data on Friday also showed that the services activity in China returned to positive levels. Mainland Chinese stocks pared earlier gains but were still higher in the afternoon. The Shanghai Composite was up 0.33%, while the Shenzhen component was higher by 0.55%. Hong Kong's Hang Seng Index slipped 0.26%. Japan's Nikkei 225 surged 1.72%, and the Topix jumped 1.35%. The S&P ASX 200 in Australia rose 0.72%. In South Korea, the Kospi was down 0.16%. And U.S. stock index futures were little changed during early trading on Friday morning as Wall Street awaits Friday's key September jobs report. Meanwhile, stocks advanced during regular trading on Thursday as Washington reached a deal to raise the debt ceiling into December. Our correspondent, Mario Bird, has details.
On Thursday, the U.S. stock market showed its third straight day in a row of gains. The NASDAQ, S&P 500, and the Dow Jones are all on an uptick. Traders are watching to see what will come out of the labor market report. Will it provide insight into the job market? And will this keep the economy steady till the end of the year? The unemployment rates in the U.S. have also shown an all-time low since the pandemic. It is clear that the Senate's approval of the debt ceiling increase until December has allowed for traders to feel some comfort in the U.S. markets.
And on the global oil market, prices rose on Friday morning, tracking towards a 4.2% gain for the week, on signs some industries have begun switching fuel from high-priced gas to oil, and on doubts the U.S. government will release oil from its strategic reserves for now. U.S. West Texas Intermediate crude futures climbed by 84 cents to $79.14 a barrel. Brent crude futures jumped 80 cents to $82.75 a barrel. Both contracts rose about 1.1% on Thursday as the market resumed its climb and were on track to jump 4% this week. Overall, the week's run-up has been spurred by soaring gas prices, encouraging a switch to oil for power generation, and by some industries, along with a decision by the Organization of Petroleum Exporting Countries and Allies led by Russia, together called OPEC Plus, to stick to plans to add only 400,000 barrels per day of supply in November. Gold held steady on Friday morning as investors stayed away from making big bets ahead of the U.S. non-farm payrolls report that is considered key to the Federal Reserve stimulus taper timeline. Spot gold was steady at $1,755 dollars per ounce, down about 0.3% so far in the week. U.S. gold futures fell 0.1% to $1,757. In other metals, spot silver fell 0.4% to $22.48 per ounce. Platinum rose 0.2% to $981.37 per ounce, and palladium eased 0.4% to $1,951. Africa. And Africa is hungry for investments. That's the words of the former Nigerian President Olusegun Obasanjo to investors at the Africa-Dubai Investment Summit taking place in Dubai. The former Nigerian president who joined the event virtually also cautioned attendees to beware of unscrupulous individuals. Our correspondent Maiwa Adegoke brings us more details in this report.
Investing in Africa is in focus at the first Africa-Dubai Investment Business Summit, and organizers are keen to get UAE-based money bags to pitch their tents on the continent.
We've noticed that in the past, we have people in Africa that need investors, but they don't know how to get that. And then people in Dubai that want to invest in Africa, but they don't know how. Now we are coming in as the middlemen, merging these two entities together to begin to talk and see how they can do business.
The event is under the patronage of the private office of a sheikh in the Sharjah royal family.
For us, it's quite important, especially with our royal office, with His Highness Sheikh Ahmed bin Faisal Al Qasimi. We have such a diverse group of people under one office, and the reason for that is we go where our heart takes us, and usually it does take us to Africa.
Associated with it. Now, one of the risks associated with moving.
Panel discussions range from digital banking, blockchain technology, to diplomacy and identity management. However, stakeholders here who have come from across the world are hoping for more than speeches. Attending the event virtually is Olusegun Obasanjo, whose remarks highlight some of the issues plaguing the UAE-Africa business relationship.
In the middle past, there has not been sufficient knowledge, understanding, and interaction between Africa.
All agree that the youth and women hold the key to Africa's prosperity.
Sometimes these youths who have this innovation and this technology are not connected directly with the government.
There needs to be a special attention to women because they've been outside of the financial system for so long that we need to make sure that they're included and they're represented, and that the solution that we propose are adapted to them.
It appears this blossoming relationship between Africa as well as the United Arab Emirates is going well. Time will tell how successful this would be and how mutually beneficial it would be for all parties involved. From Dubai in the United Arab Emirates, Maiwa Adegoke for Channels Television News.
And after the break, Nairobi ranks among top 100 international financial centers in the world. This and more in a moment. Nairobi, the capital of Kenya, has been ranked among 10 top 100 international financial centers in the world, playing in the same league with cities like New York, London, and Hong Kong. In the index, Kenya's capital ranks at position 98, up 8 positions in March and 21 places in terms of rating. In Africa, Kenya was placed sixth after Casablanca, Johannesburg, Cape Town, Mauritius, and Kigali. Globally, New York retained its first place in the index, with London in second place, although both centers fell slightly in the ratings. Hong Kong and Singapore ranked third and fourth, with San Francisco taking fifth place, overtaking Shanghai. The Global Financial Centers Index was created in March 2007 and lists major financial hubs on their competitiveness. It is revised every March and September. South Africa's Metal Workers Union on Tuesday began an indefinite strike seeking pay raises. The union has around 155,000 members working in various industries, including auto mechanics. To update us on this development and more in South Africa this week, our correspondent Brian Pogeni joins us now. Hi, Brian. Good afternoon. Good to see you.
Good afternoon. Thank you for having me.
So this week, metal workers union staged an indefinite strike. What's the latest on these? Are there talks already with the authorities?
Well, talks have already started. The unions were demanding 15% initially, which they dropped to 8% at the end of August. So at the moment, they're demanding 8% increase. But the Steel and Engineering Industries Federation is saying they can only offer 4.4%, which is in line with inflation rate. So at the moment, they're at loggerheads. There are still discussions. The Minister of Labour and Employment coming out yesterday to say the two parties must reach an agreement because this is really hindering economic recovery.
Now, this strike started since Tuesday. How much impact has it had so far on industries, particularly the auto industry?
Well, it's had a very negative impact on all industries at large because yesterday we saw COSATU and other unions joining, which means it's not only the mining industry only, which is now at strike. We're now having other industries. So definitely industries like your agriculture will also be affected. Like you said, your motor industry will also be affected. We saw 30% sales dropping last year when there was little economic activity in South Africa due to the various lockdown restrictions. So now having a strike like this, a major strike like this from mining coming down to motor industries to agriculture will really affect the economy as well in just this whole week on its own. And we don't know when the strikes are going to end.
Also during the week, the World Bank in its Africa Pulse report forecast South Africa's GDP to grow by 4.6% this year. What reactions are you getting on this, both from economic analysts and policymakers?
Well, it's a welcome projection and a forecast for the country and the growth of the economy and the GDP. We've been seeing slow GDP growth in the first quarter and the second quarter, and this by the World Bank saying the South African economy is forecast to grow by 4.6% has been welcomed by analysts, but they're still saying it's a slow growth, largely due to the social unrest we saw in July, high employment rate, which is really a big hindrance in all activities at the moment in the country. The official rate is 34%, but we are hearing that unofficially it's way more than that, and mostly it's the youth being affected. So that 4.6 growth forecast by the World Bank has been welcomed quite well.
Well, as the World Bank and IMF prepare for their annual meetings next week, what agenda is the South African government hoping to push at this year's meeting?
Well, firstly, like I was saying before, the main thing which the government has to push is job creation. They've been talking about job creation way before COVID, during COVID, and even now when the economy is starting to recover. So they are really hoping to get funding to create jobs for the youth especially. And what the government has said is that they hope to have a 350 Rand social welfare grant for job seekers and those who are unemployed. And the World Bank has actually welcomed that, and they are saying they are hinting at funding that, which will be over 16.2 billion Rand per year. So we're waiting to see when South Africa goes to the World Bank agenda, if that World Bank will really commit to that. And also, besides the unemployment rate, South Africa is looking for funding for greener energy. We know that they are planning to source out to cancel out coal-powered energy at the moment, which is emitting a lot of gas in the pollution sector.
So, what should we be looking out for next week?
Well, next week we'll continue to look at. We're keeping an eye on the strikes. Hopefully, by Monday we'll have all these strikes ending, and we're keeping an eye as well on the rand, which has been quite low. We saw it reaching the 15 rand mark for the past couple of weeks. Today it was trading at 14 rand 90, which is good news. Hopefully to continue to strengthen. Load shedding is back in South Africa, which started yesterday. Hopefully they're saying over the weekend we might have load shedding. But in good news, in light of load shedding, Johannesburg residents might have light at the end of the tunnel because they signed a new private power agreement, which will get the city 100 more megawatts to businesses and to households.
That's quite interesting, and let's just hope you'll be able to update us on that sometime next week. Thank you very much, Brian.
Thank you.
And the African Development Bank has promised to support trade valued at $7 billion over the next 5 years in a bid to spur the growth of the world's biggest free trade area. The financier, founded in 1964, will guarantee loans given to companies to sell their products across the continent in a move that will facilitate the development of the African Continental Free Trade Area that went into effect on January 1. The bank will back about 2,000 transactions. Companies in 2019 faced a shortfall of $81 billion in financing trade. According to a survey done by the AfDB, the gap has widened further following the coronavirus pandemic, which devastated demand and made it difficult for companies to meet credit conditions set by local and foreign lenders. That prompted multilateral lenders to pledge support. The African Export-Import Bank plans to make $40 billion in funding available for the next 5 years, while Africa Finance Corporation has also promised backing. Kenya and South Sudan have signed a border crossing agreement to strengthen their long-standing economic and political alliance. The pact was signed in Lodwar, a border town between Kenya's Turkana district and South Sudan's eastern Equatorial State. The accord brings Kenya into South Sudan's Belt and Road Initiative, a multi-million-dollar infrastructure scheme intended to stretch from east to the Horn of African countries. The project aims to significantly expand economic and political influence and has raised concerns among South Sudanese intellectuals and legal experts, pointing to the lack of representation of legal institutions. The two parties have pledged to commit themselves to foster peaceful coexistence among communities within their borders through cross-border peace initiatives and free movement of people, as well as goods and services. And that's a wrap on the program for today and, of course, for the week. Thank you for being part of it. I'm Chimizi Obi Iwago.